Joining us right now at the Business Roundtable in Washington, D.C. to talk about workforce development, the economy, and much more is Jennifer Rumsey. She's the CEO of Cummins. She's also the chair of the Business Roundtable's Energy and Environment Committee. And Jennifer, thanks so much for being here today.
Great to be here today, Becky.
All right, we're here talking about policies in Washington. You are the chair of the Energy and Environment Committee, and yesterday the SEC voted in a controversial proposal. This was watered down a bit. It wasn't quite as strong as before, but it does require more disclosures for companies when it comes to the risks that could be associated with climate change. What do you think about that?
Yeah, as you said, they revised that from the original version, which had some really concerning things, including expectations around Scope 3 and level of reporting. I mean, we continue to study that. It was a 800-plus page document, but fundamentally the question is this an area that the SEC should be asking companies to disclose, and what's going to be the level of reporting or work required? We're committed to decarbonizing and addressing some of these environmental challenges in our businesses. Many of these companies, including Cummins, have sustainability goals, and we just want to make sure that we're able to invest our time and dollars into driving those real benefits versus a bunch of documentation and disclosure and potentially creating risk.
Do you anticipate that these rules will be challenged, even though Scope 3 was the one that said you had to figure out how much climate risk there was in the supply chain, other things down the line? Companies pointed out that that would be pretty tough to track down and even be able to provide reasonable looks for it. With that part missing, do you think this will be challenged? Do you think the SEC has the authority here?
Yeah, I think that's the question, really. And, we're assessing as a BRT and I think other groups are going to assess, is this really, the right place for the SEC to add regulation, even with the changes that they did, acknowledging some of the feedback that we all gave.
Jennifer, let's talk about what Cummins is doing, because you all have made some pretty big bets on the future of electric vehicles, commercial electric vehicles, including this $2 billion that you're investing with some partners in a battery plant that's due to open down in Mississippi. Yeah. It's a tougher issue than even consumer EVs, because in the case of commercial EVs, it can cost 3 times as much as a diesel truck. Yeah. And so it's some big commitments from the customers to actually put these things together. Right now, there are a lot of rules and regulations that both the states and the federal government are pushing to make it more palatable or to put the stick to them if they want to buy diesel trucks. If there's a new administration and those rules change, will it be much tougher for you to be able to make a profit on some of these investments?
Yeah, I mean, look, here's how we see the landscape. Destination Zero is our strategy, and it is about decarbonizing our industry because we recognize that there's real issues with climate change, and commercial vehicles and industrial applications, they're large equipment. They contribute meaningfully to CO2 emissions. That said, our customers, those products are at the heart of the economy. They're running businesses. And so, as you noted, this is a different challenge than it is for passenger cars. How do you decarbonize commercial vehicles? That's why our strategy is really dual path. We have to work on improving engine-based solutions, and we're doing a lot of work in investing in next-generation engine platforms, including diesel, that have lower CO2 emissions, as well as alternate fuels, and then starting to drive adoption in electric and even hydrogen-based solutions in applications where they make sense. So that's a critical part of our strategy. And you need incentives and you need the right regulatory framework to help drive that adoption in a way that makes economic sense for our customers. Because as you said, they cost more today and they need an infrastructure. Yeah. They need an infrastructure that doesn't exist today. And so on the one hand, you have to move forward with this, but you have to do it in a way that makes sense. And we'll work across both sides of the aisles as we have been. And
it's
we'll
just
continue
that the two
to
sides
do.
of the aisles have pretty different viewpoints of this, and it can mean big swings in the federal guidelines and the federal regulations that are there. How much tougher is it as a business?
Yeah, we need regulatory certainty, right? We need
Yeah.
regulatory certainty. Our industry works closely with regulators, EPA, California Air Resources Board, on what does that look like. It's important that we have that certainty because it takes us years and we're making big investments. So let's talk about some of the investments that we're making in this strategy. Yeah. $1 billion in our U.S. engine manufacturing plants for these new fuel-agnostic engine platforms. And then you noted this new partnership that Cummins has with PACCAR, Daimler Truck, and EVE Energy that we're going to invest, $2 billion in battery cell manufacturing in the U.S. For commercial vehicles and industrial applications, and creating 2,000 new jobs in the U.S. So it's helping to create jobs. It's helping to drive the economy, and we need the right regulations and incentives that can do that, and also ensure our customers can continue to be successful.
So it's a jobs week. We're going to be getting the official government jobs report on Friday. What's the economy look like from your perspective right now?
Yeah, I mean, from our perspective, we're coming off of a record year. We had $34 billion in revenue, which was record for the company. We had record operating cash flow, really strong year, and we saw strength across many of our markets. We also saw some softening late in the year. We're forecasting to be down 2 to 5% this year, but we're a cyclical business, so it's typical for us to see that. And I'd say this is not as deep of a down cycle as we might see historically, because supply constraints have really limited our industry's ability to produce through the peak. So things still look, pretty solid for us, and I'm feeling optimistic that we'll see, another improvement in our business in the not too distant future.
Where'd the softening come from?
Yeah, the biggest areas for us, heavy-duty truck market in the U.S., if you look at spot rates and the things that really drive that market, they've been down for 18 months. And so some of those customers are seeing more challenges. It was really the supply constraints and pent-up demand, if you will, that's allowed our business, our OEM business, to remain strong. Construction, another area that's down. Countered to that is power generation. Data centers are driving, continued really strong demand.
But interest rates matter.
Yeah, interest rates matter. Customers' ability to buy new equipment is impacted by those interest rates, as well as, freight rate and those other factors.